Thank you so much for joining us today for this webinar on how to thrive in microinsurance, organized by Microinsurance Master. I'm 𝗵𝗵𝗿𝗀𝗺𝗿. I'm the founder of Microinsurance Master, and it's my delight to be the host of this session today. Still a lot of people are coming in. I'm really impressed with the number of people who signed up and who showed that they're interested in the theme of microinsurance, and also in the recipe for success that we will be discussing today. Just up to now, we received close to 450 registrations, and as I can see, still a lot of people are entering the room. But I don't want those who joined us early on to keep waiting, so we'll start anyway. What I will be doing today is to provide a presentation and a bit of an overview of what we have learned in the past 5 years on working with several microinsurance masters across the globe. Though it will be a presentation, I'm really looking forward to hearing from you throughout the session. So if you have any questions, if you want to challenge our thinking or have other ideas, please put them in the chat, or better said, in the Q&A. And then we'll integrate the answers to your questions at the appropriate time in the session. If there would be any question that would not directly relate to any of the subjects, then we'll save those until the very end when we have a more broader and random Q&A session around how to thrive in microinsurance. Also, in the head-up and in the line, in the preparation, we really received a lot of interest from on the Microinsurance Master Accelerator program, for which we are currently recruiting 20 key decision makers to join us in September. So we'll have some space at the very end of the webinar to respond to any of the questions that we have received, or any questions that you still might have. But we'll do that at the end, so for those who are not that much interested in that accelerator program, that they can sign off and then can leave it to the core subject of what got us here together today. That's a little bit on the practicalities. Yeah, I'm much looking forward to get it started. And again, much looking forward to respond to any questions that you might have throughout the session. So what we are going to discuss today is the key ingredients that we really have seen time and again as an essential part to thrive, to make a difference, to be successful in microinsurance. These key ingredients were not developed or invented by me, myself, and I, but they really have been born out of a consensus, out of working with 54 decision makers from 40 organizations in 27 countries over the past 5 years. And it is a little bit like with pancakes. Everyone across the world knows pancakes. Most of us do like pancakes, but they come in different sizes and flavors. Some of us eat them for breakfast, others eat them as desserts, and the clever of us, they do both. They eat them both as breakfast and dessert. But as you all know, a pancake in the United States and a pancake in India or in Ethiopia or in Papua New Guinea is quite different. Some are thick, some are thin, some are small, some are large, some are very spiced, and others are not. And that is the same way that we like to think about these key ingredients to thrive in microinsurance. We see them as essential building blocks, as essential parts that you will have to manage in order to be successful in microinsurance. But the way that they play out, the way that you implement them, will depend on the circumstances, on your market, on the regulation, and even down to the culture and the setup of your company, the ambition that you have, and the type of partners that you can engage with. So with that in mind, let's dive in and let's see what we can really bring together here in our session. But let's dive into the subject matter of today: how to thrive in microinsurance. And let's start at the very top of our list. This little one, this little box here, business to consumer. And indeed, what we see is that the dominant model in microinsurance is still, and for good reasons, a B2B to C model, with an insurer working together with a distribution partner to reach low-income families, low-income households in their market. And increasingly, with the rise of mobile money and as such also mobile insurance, some insurance companies are tempted to skip the line and say, well, we don't necessarily, or we might not need an intermediary or a partner. We can basically go directly to consumers. And I hate to repeat this phrase, but it's still true that nobody wakes up to buy insurance in the morning. And that is still the case with mobile insurance as well. It's not because you have an app on your phone or you have a USSD menu that suddenly people will wake up in the morning and want to go through that menu, want to download your app and then buy insurance from you. Insurance is a complicated product for a lot of us, and also for low-income customers. It's an unknown product for many of the people we want to reach with microinsurance. And it is also a one that has a bit of mistrust on the stories and the experiences that a lot of people have had in the past. So even though mobile makes it easier to reach customers, it is not an excuse, so to speak, to leave out the middleman and to leave out the partner. Also, obviously, because insurance companies don't necessarily are a known brand to low-income customers, because there has little to no interaction in the past. And also, obviously, if there is any understanding of insurance, as I mentioned before, very often it's not a trusted brand, or insurance is not trusted. So working with intermediaries remains a really good way to overcome these issues, as we will see in the course of our talk today. So it might be an ambition for insurance companies, and several do have that, to eventually go directly to consumers. But the most effective and efficient model today is still with the intermediary as it is. So what we promote at Microinsurance Master is a customer-centric approach to microinsurance, a customer-centric business model to microinsurance. So to put it at heart, we'll start with the customer and then work backwards. So if we look at the customer here on our slide, we think that there are three key components that are essential to thrive in microinsurance. It is to respond to a need, to design a first-line support, and also to be there in times of need. So I get often asked in my work by insurers to say, hey, Bert, can you share with me a successful microinsurance product that we can implement and then can make it into a success? That is a tempting question, but it's maybe a wrong question, because that assumes that we can just build a catalog of products and then push it into the market and then assume that people will pick it up. Instead, what we have seen time and again, that it is important to build a better understanding of customer needs and of really what customers and low-income customers have as concerns. What are the risks that they face? And from that deep understanding, to build solutions, not just products, but solutions. And I will come back to that a little bit later on. So that is maybe a first really important element for any insurance company who wants to make a success into microinsurance, is to really to understand customer needs, and from there to build a response to that as well. And if all is well, we should have one of our past Microinsurance Master participants, alumni, but we like to call them our masters. And one of them is 𝗵𝗴𝗿𝗁𝗂𝗂𝗍𝗂𝗂𝗔𝗓, who's heading the inclusive insurance activities at 𝗵𝗵𝗁𝗁 in Zambia. So Violet, I would be keen to know from you, what really do you do to understand customer needs? What have you done to get to build a deeper understanding. And maybe you can share an example of a product or a solution that you've been able to build from there.
Thank you so much, Bert, and good morning, everyone. The first thing that you would do as a microinsurance person, if you want to build a product, is you need to first go and do interviews, because we all know that most of the products that traditional insurance companies would come up with products that we make from the boardroom. So as a microinsurance master, yes, we have built a product, and we did go in the field. Obviously, you first come up with your target market. You segment your markets, and after segmenting your markets, you know that this product that we want to build is for this particular segment. So after segmenting your market, then you go in the field. You do personal interviews with your target market. I must say, yes, there's a product that we have designed through the same process, where we went to the informal sector, and we went, did interviews, and sometimes it's not just a matter of you just going there for an hour, you do interviews. You really need to immerse yourself with these target markets. You need to spend a lot of time. I think most of us, we are in a hurry really to just say, okay, I've interviewed 2 or 3 people. You really need to interview a lot of people, because this is a product that you want to see be on your shelves for a long time, and something that is going to speak to the needs of the customers. Yeah, so we have a product which we call 𝗪𝗪𝗿𝗪. So the process was we went and interviewed our target markets, and when you interview them, you even get things that you didn't even think really were needed. Yeah, so we went and interviewed clients. We came up with a product called 𝗪𝗪𝗿𝗪. This is an SME product, which covers property assistance, because we all know that for business really to thrive, for these people in the informal sectors, they need to protect their assets. So we were told they needed a protection of their assets against fire, against things like storm and impact damage. Like in Zambia, we've had scenarios where there's a shop that an SME is selling, and from nowhere you find maybe a tree falls on the shop, or maybe a car hits into that shop. So those are the risks that we're able to pick up, and we included in this product. And the other thing is that what happens when somebody suffers a loss? You find that obviously they lose income, because it's not like a claim such as fire is like taken care of there and then. The claim cannot be paid within 24 hours. It's not like a funeral policy. So that period, which will take, obviously we'll make sure that we pay our claims within 5 to 7 days. But that period, we have said that would definitely give a client some loss of income, which we call business interruption. So our product covers that as well. And then we do realize there are scenarios in Zambia where there was a fire in the market, and you find 1 or 2 people died in that fire. So we are saying that we're also covering the business owner for financial assistance in case of a death, a funeral cover. So this product does cover that as well. And yeah, so basically we saw that it was a product that was comprehensive, and it actually spoke to the needs of the people out there. Yeah. Thank you, Bear.
Thank you so much, Violet. There's really a lot to unpack in what you said. But as you mentioned, it's not enough to just spend an hour doing a quick survey and then leave. The more time you spend with customers, you gain some deeper insights. And it's not only about what people say, but also to observe what they do and how they do and why do they do things. It might be something that people don't really find that amazing or special because that's how they just go about their day. But you as an insurer, you see, hey, why are you doing this way? Maybe you can do something else. And what I also liked a lot about what you said is, you didn't say it, but you provide yourself. And I think that's really important as well. This is an important part of building a microinsurance business, is gaining deep understanding. And so it's not something that you can outsource to a bunch of students to do a survey. What you are after at this stage, in the very early stage, is qualitative insights, first and foremost, over quantitative insights. You can build those quantitative insights later on, but you're looking for nudges and ideas to really build that. Isn't it, Violet?
Yes, yes, Bert. Though your line is not very clear. Yes.
All right. Oh, then sorry to hear. I do hope that the majority of people who are attending though can hear me fine. Thank you so much, Violet, for sharing that, and keep up the great work at Pollard in Zambia indeed. So this is part one, and Sharon asked the question that we will unpack a little bit later on as well, about going in with a product and a prototype versus interviewing. And yes, they do go hand in hand. What do you need to do first? Obviously, you first want to have a series of interviews from where you build a deep understanding. But as quickly as you're comfortable, it's good to go in with a prototype to see how that is resonating with your clients. But more on that later on. So we go down to the list, and the second key ingredient is to think of microinsurance not so much as an indemnity product, but really as an assistance. But what you would like to do is to design a first-line support. You need to think that in microinsurance, it will be really hard to indemnify all of the loss that someone has, as it is the case with retail insurance. If you would be able to pay the full funeral expenses, pay the full hospital bill, pay the loss of crop, most likely then there will be some a premium that you need to think about that would be too much to ask from your customer. So design a first-line support. I think this is a great difference from working in retail insurance. We are not able with microinsurance, with the small premium that we're able to ask, that we're able to collect, to pay a full indemnity. But what we can do is be there in times of need and to really build a solution that is a comprehensive solution, that is a holistic solution. And 𝗵𝗼, who started out as a mobile insurance, is now increasingly focusing on health, and they provide a really great example. Initially, their offering was hospital cash. So that means that when you're in the hospital, that you get a payout for the time you're in the hospital, a daily fee. But over time, they have expanded that cover to also include a hotline, teleconsultations, to give discounts on medication, and even give some medication, generic medication, for free, to allow people to make appointments with doctors so that they don't have to spend the day traveling to the hospital just to make an appointment and come back. So ultimately, what they want to achieve is to be top of mind when people have a health concern, and so that also they use the services of 𝗵𝗼, not just when that one time they're in the hospital, but every time that they are sick, that they would think of 𝗵𝗼 as being the first line support. And I think that's a great way to think about microinsurance going forward. And then a third element, obviously, and this is something that is known increasingly well, is to be there in times of need. And with that, we mean that clients who have a little income, or they also have scarce resources. So if you're not there when people are in the hospital, if you're not there when people have to go through a funeral and cover the expenses, then still people will need to pay for that and need to out of their pocket, and they will need to sell assets. They might need to sell a cow. They might need to take an emergency loan, or even worse, go to the money lender. So in microinsurance, to have to value and provide value to your customers, it is key to really to be there in times of need and to be there when people basically have to make those expenses. But obviously, as we all know, that requires a complete way of working and thinking for an insurance company. It means that you can't go through the rigid process of a claim form and then an investigation with all kind of elements to prove that the claim is legitimate. It will require you a complete way of rethinking your approach to claims, to be sure. One of the examples that we will pick on later on as well is Pioneer in the Philippines, who have a calamity insurance. So when there is a typhoon, they will indemnify, they will pay some of the damage that people have. Obviously, it's quite an endeavor because a lot of people are hit simultaneously. But Pioneer and their partners like CART, MFI, they managed to go into the areas that are hit the day or the days after the typhoon devastated the homes, and to immediately provide an assistance, a payout, in order for the people to pick up from there and to have a little bit of money to go back to the shop to buy some new material to make their house. And that, studies have shown, is very often way more valuable for people and clients as compared to a bigger payout that would come 6 months, a year down the line, because then people are still struggling to make meet ends for that entire time. Good. So this is our first set of ingredients. You want to be customer-centric, and these are 3 of the components to think about. So let's look at the middle part, the partnership part. As I mentioned, partners can help you not only to build trust with the community, but I think that already over here you can see some elements where partners can really help you. If you want to gain a deep understanding from customer needs, obviously, if you can work with a microfinance institution, an association, a union, or a motorcycle dealer who has been working with the clients you want to reach already for years, they will have some understanding. And so they can give you a head start in building a solution that fits there. And obviously, a partner can also help tremendously in being there in times of need, because they have their outlets, they have their branches, they have their people on the ground. They can be there when there is a funeral. They can be there when there is a harvest that went lost. They can be there when there is a calamity, so that really they can help you to provide the stellar service that you would want to do. But we need to think more than what a partner can do. And basically, as an insurance company, you would also like to think, what can you do for the partner? And an insurance company would typically think of commission as the way to make it work. But a little exercise can already very quickly tell you that that won't suffice. Say a microfinance institution who's giving out $100 loans and making a gross margin of 10%. So that means for each loan that they give out, they have $10 earned eventually. People come to the bank to ask for a loan. It's a straightforward process. It shouldn't take that long. And this is also obviously the core business and the comfort zone of the loan officers who are doing that. Now, compare it to a voluntary sales of a microinsurance product where, say, we put a microinsurance cover that is worth $10, which is already quite an important premium. Nobody is coming in to ask for that insurance. So the loan officer, who very often might not be more familiar or more comfortable with insurance products, then need to actively promote and educate clients about that. That might take quite some while. They need to fill in forms and all of that. And so maybe from that $10, they get a 20% commission, which would then boil down to $2. So already from a business case, it doesn't really add up to just do voluntary sales of insurance as compared to core products for most of the intermediaries. But instead, similar as to with end consumers, what we see that worked really well, if you can find ways
to upgrade the core business. And that means that you also, with your partners, you want to approach them as clients and see, so what are you actually doing? What are some of the risks that you face? What are some of the challenges that you have in your core business? And how can we help you with insurance to really upgrade your core business? For instance, by combining savings with insurance, it means that you have a competitive advantage. Or maybe your partner is already providing some health-related products, for instance, an emergency loan. Well, you can complement that so that together you can build that holistic solution that we talked about before. So you can complement each other with these services. We also know the example of a bag of seeds or fertilizers that is sold with a free insurance on top of it, which is making it easier for customers to pick that bag of seeds with that free insurance cover as compared to a bag of seeds that doesn't have that insurance cover with it. And so it helps intermediaries to expand their services, to increase the value proposition, or to go to new territories and areas where otherwise they can't go. Some MFIs are able to give loans in areas just because they have insurance and know, okay, we know that if the weather is not good enough, we can still recycle or get back part of the loan through the insurance cover that was there. So that means that you just don't want to go in with a catalog, but you really want to think of what are the risks, what is the value proposition that the partner has, and how can we take away some of the risks? How can we increase the value proposition of your intermediary? And secondly, and this is also a key part, the ones that we have really seen that thrive in microinsurance, they find a way to co-own the program. And this is very different from a classical way of managing insurance, where if you the value proposition is commission, what you basically do is you give a cut on the top line. On the revenue, you receive a commission. But those who co-own the program, they go beyond that and they say, well, let's do this together. Let's not just go with the products that we have on the shelf, but let's design the solution together so that it's really tailored to your customers. But when you really think of ownership, it might also mean that you're not only going to share the top line, a bit of the revenue, but also the bottom line, where you say, well, we're in this together. We want to have skin in the game together. And we are going to share part of the profit, but maybe also part of the loss when we make some. And if you do so, it alters the game altogether. Because an insurer very often is also a bit reluctant or hesitant about the partnership because you have conflicting interests, because the MFI or the intermediary has an interest to sell as much insurance because then they gain more commission, but they might not be as interested in claims because they would want to see a lot of claims and they also might missell some of the products. But obviously, the moment you really have a co-ownership and they would also share profit and loss, they will think along with the insurance company on how they can really make this work. It also shows the commitment of the insurance company to do things differently. And again, adding these two things up makes it clear that your intermediary will not run away to another insurance company when that insurance company would give you a little bit higher commission fee, because you have created something that is really tailored, that is really of value to your distribution partner, and at the same time, they have a co-ownership. So with that, you're really building a strong foundation for a partnership. And let me take a break here with a calling on another Microinsurance Master. This time we go to Malawi, where 𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗧 is with us. He joined Microinsurance Master in 2020. And 𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪 with a church to one that is built on co-ownership. So maybe you can tell us what it made of a change to go from the classical commission-based partnership to a co-ownership.
Yeah, thank you so much, Bates. I would like to share the experience we have had partnering with the church, Presbyterian Church, popularly known in Malawi as CCAP. So
could you share your video, maybe?
Oh, okay. That's
Thank
fine.
you so much. Wow, on the move.
Yes.
Fantastic. Thank you for joining
So,
us from your car.
We partnered with the Blantyre Synod of the CCAP Church. So in the partnership, at first, for you to go and sell insurance to a church, it had a bit of a problem because they say, you know, Jesus had prevented people from doing business in the synagogue. So they say, no, you cannot come here and do business. You're bringing business into the church. So we need to manage that. So the best we had to do is to come with a proposition that what we are trying to do is just to complement what they're already doing. Because if a member of the church has died, people within the church, if there isn't a coffin, they contribute small money so that they should assist during the funeral. So we had to present to the General Assembly where all the pastors had to attend and try to convince them that this thing is just helping what they're already doing. And for a buy-in, we had to give them a profit share, a 50-50 revenue share. And the part of the work was being done by the pastors themselves. So in such a scenario, we saw that there was a buy-in, and the partnership became, and the product was not known as for the underwriter. It was known like the synod has established a funeral product which needs to help churches. And from that end, we saw that we had put even incentive for the pastors who are going to bring in a lot of their members to subscribe. And in that case, we found that the figures pushed very well. By the end of last year, we are close to 2,000 members, and we hope this will continue to grow. So in a nutshell, is when you're having partnerships, you really need to, as you have rightly said, you really need to understand your partner, the environment they are working, because they are already doing something before you come for a partnership with your microinsurance solution. So you need to come in not as someone who is more knowledgeable, has come up with an answer to their problems, but you are just complementing things they are already doing. The same thing, if you, with the example I've used of microfinance institutions, they already have got some establishment with their clients. So you come in, it should be complementing of what they already those guys have already established. So when we are doing everything in the microinsurance and in partnership, make sure that the partner should not be taken away, and preferably he should be in forefront, you should be behind. Thank you, Beth.
That's great. Thank you for sharing these valuable lessons from literally being on the road. That is really very helpful, Cosmos. And indeed, let your partner shine, and then you can grow along with them. Is a great piece of advice. And what you said is so true, to think about where are they and how can you really build a solution from them. What we've seen is that if you go in with a product catalog and say, hey, we can do accident cover and health and this and this and that, you're basically making a commodity out of your services and out of your offering. Because if you need to think this through and you would want to think of yourself on the receiving end, what would you do the moment the sales rep is leaving the office? You look at the policy and you say, well, let's call another insurance company and see how they compare. And then you're entering a price war. You're entering a competition on price. Who is going to give the better bits and pieces, which is not necessarily what you want to do. And again, turning to our friends in the Philippines, and this is actually going to our third point, what is really important lesson is that also in microinsurance, you can compete on value. Yes, low-income customers and their partners are a price-sensitive market segment, but it doesn't mean that they don't value value, that they don't value the best services, that they don't value claims. And in effect, then J.Claude, who's with us, might speak on that later on in the call. Pioneer Insurance in the Philippines, they grew in 1 year from 1 to 7.8 million enrollments. And you might wonder, how did they make that big jump forward? It's because the year prior had been an important typhoon in the Philippines, 2014, Typhoon Haiyan. And so they really paid a lot of claims. But build on paying claims and being there in times of need, they created a flywheel that helped them to grow based on that growing customer awareness of what is microinsurance, and also how people then become their ambassadors of your solutions and recommend it to their peers and even to the partners, etc. So I think that is really great. And it also means, to link it back, that when you have the option, you want to go for a high claims frequency. So you want to have people to experience insurance. One of the challenges in microinsurance, obviously, is that people have little to no understanding of microinsurance. So if they don't ever get to claim, how can they really see the value of insurance? So if you are designing a solution, if you're designing a product, and you have the option of having one client receiving $1,000 or 10 clients who could be beneficiary of 100, for sake of the education and also making sure that you can grow to word of mouth, the second option would be preferred, because that allows you to have more people to experience insurance for the first time and to see the value of microinsurance. Good. Two-thirds done. Thank you also for the questions that we're getting in. Please continue to add those, not only in the chat, but also in the Q&A, and then we will respond to those throughout the session and or at the end for those who don't fit immediately. Let's look at the third pillar, the last three elements for making it work in microinsurance and to thrive, and the recipe that we have seen there. So also the insurer needs to get their act together. It's not just enough to get a good understanding of customer needs, to have partners there, but also the insurance company need to organize. And the best way to think about it, to organize for innovation. There's a lot of writing and talk about innovation and building innovation hub, etc. But ultimately, microinsurance is for insurance companies and partners and the end consumers a very innovative solution, a very innovative product. So there's a lot that we can learn from there. And the first really important one is to act on purpose. And I think this is very often setting the foundations for a failure later on. So often when I'm about to enter a meeting with the board members or with management, I'm pulled aside and asked, please don't tell that it takes long to really to grow to big numbers in microinsurance. People would like me to say that it is easy peasy and that you can grow tremendously and make it a very profitable business in no time. But obviously, if that is the premise that you start from and that you sell to your management, that you sell to your board, that is what is going to come back as a boomerang 2-3 years down the line, right? We have seen by now several companies who really make it work, who can really grow in big numbers and not only grow in top line, but also in bottom line, in profit contribution. But it just takes time because people need to experience insurance, people need to experience claims, and the life cycle of an insurance is typically a year. So it's not an overnight success in most cases. So that means that in order to anchor it correctly in the business, you also need to find other elements than just it's going to be an instant hit in no time. Think of mobile money. We all talk about mobile money today, but if you look at the origins of how M-Pesa got started in Kenya, and especially how it got adopted in other countries, it took quite some time before it reached a scale and the scale that it has today. So, for instance, take one of the biggest insurance companies in the world, AXA Insurance. They have an important emerging consuming business. Now, AXA in 2021, they had 28 billion euros in revenue. So you can imagine that it will still take a long time before emerging consumers make a significant contribution to a revenue of 28 billion euros. But if you look at other statistics, if you look at the number of clients, then you see that already today, AXA worldwide has 22 million emerging consumers, as they call it, out of a total clients, retail clients of 105 million. So that means that already 1 in 5 and almost 1 in 4 clients today at AXA is an emerging consumer, which obviously speaks for huge upward potential. It's not going to contribute to the profit overnight or in the next year, but you can imagine that as people grow in income and grow and graduate out of poverty, as it is nicely put, that they might remain loyal to AXA, who was there when they were still in not so a comfortable position, and that over time, in the long term, it really is going to contribute to their top line and bottom line as well. So this is one important foundation, and if you don't have that foundation, then it will come back as a boomerang later on. Secondly, what we've also seen is that it really is important to assign a champion. Yes, you need the buy-in from your management and from the board. If you don't have that, it will be a really difficult endeavor. But you also need someone who is in the driver's seat, someone who is the entrepreneur or the intrapreneur within a company, who is really going to make this battle work, who is going to go out there and wants to go off the beaten path. Very often people, the ones we have in our cohort of Microinsurance Master, who understand that their job is on the line because they are going off the beaten path. They take risks that none of their colleagues takes, because they say, we need to do this very differently than you. So that obviously can backfire. But they understand, and obviously with the recipes that we share in our group, have also the knowledge that and confidence that this is the way to go, that you should do this differently. And that is key indeed. And then ultimately, and I think that is important, is that you need to learn to unlearn. The classical recipes from insurance, I think by now is clear, don't necessarily work for microinsurance. If they would have worked, we would already be having a lot of more emerging consumers in anyone's portfolio, which is not the case. So this is really important, and there are some great methodologies that we also have tailored to microinsurance on design thinking, on the lean startup approach that can help us to really make that work. The design thinking approach, which talks about what Violet started off with, to first build a deep understanding from client needs, and then to build a prototype and to go and test that prototype. The lean startup, which says build, measure, learn as early as possible, as quickly as possible. You want to create that prototype, that minimum viable product, and to put it in the market and to test and see, and then continue to grow and tweak it over time. And to that, I would like to invite 𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗙 who is the Chief Corporate Service Officer at SoftLogic Life in Sri Lanka. And 𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪 And the great examples, 𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪 you have developed a partnership with the postal offices, much to how Cosmos and Violet were describing, by building an understanding from customers, finding also a solution that fits with the postal offices. But even when you launched it, and even now in the past 2 difficult years when there was COVID and you weren't able to go out as often as you wanted in the field, you were able to continue to change the product a little bit, to make tweaks, to alter it altogether. Maybe you can share a little bit of that experience with us here.
Yes, thank you, Bert. Thank you for having me on this panel. So to share the Sri Lankan or the SoftLogic Life experience in terms of the postal product. This is a unique partnership that we have gone into with a private-public partnership with the postal department. That's the largest network of the government in terms of who are able to reach to any household in Sri Lanka. There's about 6.5 million households. There are almost 4,000 post officers across Sri Lanka, and there's about 8,000 postmen who does delivery of letters and other messages. So what SoftLogic wanted to do was to reach our customers, the low income or the micro segment customers through the post office, because we felt the rural community is better reached by this network. And this is anyway, we are trying to piggyback our value proposition through this postal network. So what we did was we wanted to get into partnership with the poster. We did that. Then we went ahead and launched a product with certain information that we had on the ground in terms of the visits done by customers to the post office, the discussions we had at ground level. It's a very easy product, just a scratch card, and you enter a PIN, you send an SMS, you get automatically registered. So it's like a bit of a high-tech, high-touch sort of a situation where we wanted technology to come into the play, because we wanted to eliminate the administrative part, which is very cumbersome and also very expensive in the insurance field. So we went with that option. Then COVID came into play. Post officers were definitely stopped working because they were very much exposed due to the letter distribution and going into houses. People didn't want postman coming in, the postman didn't want to go. So then we had this mechanism of reload and have the premium payment option coming into a sort of a stalemate situation because it was not moving. So what we did was we then, not only to the customers, we started reaching out to the postman and the postmaster also to find out what are their thoughts, how do they, because they are also from the village, they are also part of that community. So what we did was to reach out to them to understand, okay, tell us what your, because we want, insurance is based on trust, especially at the micro level. The villagers trust the postmaster. They go for all their transactional need in terms of financials to the postmaster, to the postman. So we wanted to build that trust. We used their feedback as well, not only customers. We looked at their angle as well and asked, okay, tell us what you feel. So we continued our dialogue with the customer and also the key party we had. So that was very important that we understood the customer as well as the person who was taking the product to the customer. So we linked and we innovated again in terms of the product. We came up with a different value proposition, which was something return they were looking at. So we went into a product. The previous product is also there, but then we changed and gave a different version. Now, touch wood, it's really picking up. As you all know, Sri Lanka is having a bit of an economic crisis at the moment. Back from COVID, we were just starting off. Now, again, the inflation and the economic crisis has hit. So, yeah, but we are very positive because we are able to still cater on the health aspect as well as the life cover that we want to give at a very affordable premium to this low income segment. So what we did was we continued listening even through our difficult times to the customers, because customers need will change. We have to be able to adapt and change going forward. It's not, put in stone saying, okay, this is the product, this is the benefit. We will have to keep going back to the company and changing because times are changing, the needs are changing, and also to the challenges in the environment, macro and micro economic environment changes. The products needs to also cater to that. I hope I gave you a brief of what has taken place.
You did, Tilanka, and it's actually a nice look back to how Violet started. To start from really getting a deep understanding of customer needs, but you made it clear it's not a one-off. It's not something that you do at the start and then you develop and then you go back to the office and you sit back and see how it grows. It basically is a constant tweaking and fine-tuning. Not only, as you pointed out really nicely, okay, we have the postal office as partner, but within the partner structure, where should we really sit and put our product? Who would be the best place to kind of promote our product, to work with clients, etc.? And that requires quite some tweaking and changing. And you've seen that can take years, basically, until the product is so to speak final. It doesn't mean that you're not growing and over time, but it's a constant tweaking and fine tuning until you really have that product market fit, and then you can further tailor it from there. Thank you so much for sharing that, and being as Cosmos and as Violet such a great example of the lessons that we share here, and also in terms of being that entrepreneur and that person who really need to drive the business.
Thank you, Bert. Thank you.
Let me go back to the slides a final time. We managed them all to discuss them all together, but I think one of the challenges is that what we've seen is that it's not so much, you can't so much cherry pick these. It's not enough to just say, hey, we take a few of these and then we build it from there. The challenge is that you need all of these ingredients in some variety or flavor to throw into the mix. Otherwise, you have really a challenging time to make it work. Jarek, I already name dropped you a couple of times. Jarek Lauder, you're the head of non-life business retail at Pioneer. And you're a true inspiration for all of us, because you really have grown microinsurance business at Pioneer from 275,000 to 18 million enrollments in 5 years. And then it continues to grow from there. We're really lucky to come back to Pioneer next September with the accelerator program. But you've put all of these things at work. I'm wondering, also from your work as a mentor in the Microinsurance Master program, what do you find is a good place to start, if there is any such thing? And maybe also, is there any that you find the hardest to really put at work, or is it having it all in the mix that is making it challenging?
Thank you for the questions. I think my answer to both of your questions is actually related. So I had to first answer the second question, which is, what is the hardest? The hardest to me of all of the things that has been mentioned is one that's very obvious and very basic, and I really don't see a lot of disagreement when we talk about this within the Microinsurance Master, and that is to learn to unlearn. Okay. Most of us are insurers or come from the insurance ecosystem, and a lot of us have been taught to do insurance in a certain way. I wasn't any different when I started in microinsurance in Pioneer. And I thought the best way for me to do getting into microinsurance then, because I didn't know anything better, was to do things that succeeded for me before microinsurance. And boy, I was totally wrong. And in fact, I realized, and which is now my answer to your second question, Bert, the best way to start with microinsurance is to pretend that you don't know anything about insurance at all. Probably not just pretend, but to believe that for microinsurance to work, forget anything about everything that you know about insurance. Why so? A lot of what we do in traditional insurance is premised on a certain type of a client, which is most likely not your microinsurance client, right? So the things that have worked for us there, the kinds of products, the kinds of language, the kinds of distribution and go-to-market strategies works for that market, but not necessarily so for the micro market. Mm-hmm. Okay, so we'll have to convince ourselves that this is a totally different market with its unique requirements. That's why we need to convince ourselves that we don't know anything about insurance at all.
That's a great response. And it actually, indeed, if I think about 54 of our masters, several of them who really are standing out are new in microinsurance or new insurance at all, because they are not really have that all of that luggage as we all have about how it should be done in insurance. And so it is a challenge to unlearn, but indeed it stands out very much so. Thank you so much for that, Jarek. If I may, there is one other question that I would have a quick response from you on, is a question that was coming from the audience as we slip into the Q&A, is how do you keep the claims expenses low when the frequency is high? That seems to be as a bit of a contradiction. How have you managed to find that balance at Pioneer?
Think about claims as a ratio, Bert, rather than an absolute amount. And let me explain how this could work. When something is a ratio, there's a denominator and there's a numerator, right? A numerator and a denominator. Like the denominator is always the premium. So you can keep claims ratio low if you can convince clients to pay more for value. Okay, without value, the proposition becomes price driven, and that's where, you know, being expensive becomes an issue. But if you find that sweet spot of a price that people are willing to pay for, then your ability to pay claims regardless of volume won't be compromised, because the ratio overall will remain low. I hope that's clear. It's a bit of a geeky number because it's math, but that's how we look at it in Pioneer. Look at value first.
Okay, and one of the other things that every time people really realize also when they visit Pioneer as part of Microinsurance Master is that claims are an investment, that it's not just as an expense, but that as I demonstrated from one year another, jumping from 1 to almost 8 million enrollments, it's obviously also because you invested in claims the year prior, and that had is effect there as well. So I think long term would be another way to discuss that. Thank you so much for that, Jarek.
Thank you, Bert.
All right. One other question I would like to answer before we close this part of the webinar, and before we go into the extra time on the Microinsurance Master Accelerator, where some questions are coming from as well, is what about technology? If we look at the list, technology isn't on the list, though it is an important factor for many. And yeah, I think this brings us back to where I got started from with mobile insurance, where you see that some of the pioneers today in mobile insurance, like Microinsure, today the Microinsurance company, and 𝗵𝗼, they're still working on mobile insurance, but it's not like the front line anymore. 𝗵𝗼 is more focusing on health. And the Microinsurance company has it as part of the solution. And I think that we need to think of technology and mobile as we do as a utility. It is something that indeed can help tremendously to make things more efficient and effective. But we've seen plenty of organizations who really are able to scale because they have a strong partnership with MFIs, with associations, or obviously with MNOs, with mobile network operators. So technology can help without doubt, big time. It can make you more efficient, most cost effective, and what have you. But we've also seen that technology is not necessarily the one that you can trust all your eggs on, and then it will basically grow all the eggs in that basket. That was actually the reference I wanted to make. So yes, please do embrace technology if you have that opportunity, but it's not because you don't have access to mobile or technology that you can't make it work. That's why it didn't make it to the final list of key ingredients. But obviously, as with any recipe, and especially in a business, this will continue to grow and change. So if you find that you have other elements or ingredients that you would like to have seen on this list, please do reach out to us. Let us know what you find, and I would be happy to also learn to unlearn and see what we should have else on the list. And with that, I really would like to thank you a lot for your participation so far in this webinar. It was a joy for me, and then also for the panelists, to share some of our knowledge, because we really need more microinsurance champions out there who can help us to build more and better microinsurance solutions. The needs are there. Organizations like Pioneer, like Hollard, and others have demonstrated that you can really do well by doing good, by developing microinsurance solutions for low-income segments, that microfinance institutions, that other intermediaries can really benefit from it as well. And that is ultimately bringing back, circling back to the mission that we have with Microinsurance Master. You will receive an email later this week with the recording of this session and a summary, so that you can still digest it at your own pace, that you can share it with your colleagues. And obviously, if you have any further questions later on, or you would have posted the question that we haven't answered here in the session, I will get back to you in a one-on-one. Thank you so much for joining us so far. If you want to learn more about the Microinsurance Master Accelerator program that we start in September, please stick around, and then we'll have a quick Q&A around that as well, so that we use the opportunity to share that. But for now, I want to thank Jarek, Cosmos, Tilanka, and Violet, and also Muntanga, who did some of the legwork behind the scenes, for their contributions to this webinar. And I want to thank all of you for having tuned in. And I'm much looking forward to any follow-up conversations that we can have from here on LinkedIn, through email, or wherever you would prefer to. Thank you so much, and stay tuned if you want to learn more about the Microinsurance Master Accelerator program.
Thank you, Bert. Thank you.
Thank you.
Okay, so moving on. You're welcome. Moving on to the Microinsurance Master Accelerator. So yes, so Microinsurance Master is not only cooking and finding ingredients on how to thrive in microinsurance, but we also run every year an accelerator program for which we recruit 20 key decision makers. And so the next edition of Microinsurance Master is starting next September at Pioneer, at the place where Jarek just shared a little bit about. And so each year we select a group of 20 key decision makers from different geographies, from different markets, from different backgrounds, insurance companies, intermediaries, regulators, market enablers, a diverse group of people to really come together and to learn how Pioneer and other champions have really been able to start and scale microinsurance. The first 2 weeks of the program, that comes in 3 parts, is a 2-week immersion, where we spend 2 weeks at Pioneer in the Philippines to really learn how they have grown from 18 million enrollments in a matter of 5 years. But also, what were some of the failures? What are some of the hard lessons that they learned in the early days, so that you don't need to repeat those same mistakes? We go out as often as we can. So when we talk about partnerships, we go out to the branches, we go and meet clients. We talk to the leadership of partners as diverse as MFIs, some of the pawn shops, money remittance agencies, and what have you. We spend the day with clients to really also learn, how can we learn about the risks that people face? How can we really build a better understanding of the clients we want to serve? When we talk about claims, we talk to clients who went through claims experience. We talk to the claims department, and then we back it up with international best practices. And so the program takes 2 weeks, and it's not so much a deep dive into any of these subjects, but it's more a little bit like the ingredients we discussed today, how all of these different things intertwine. What happens when you make a change to claims, or you change your partnership? How does it really boil down to all of the different components? So that's part one of Microinsurance Master. And then we continue with part two, which is 3 months of mentoring. The ambition of the program is really that we can contribute to making more and better microinsurance solutions for the low-income population that you serve. And so following the program, we hook you up with a mentor, someone who has been there, done that, an experienced leader who will help you to formulate and then to implement your key takeaways back home. We've had some tremendous results on which we're really proud. Some insurance companies have grown with $1 million of premium in just 1 year. Others have turned a significant loss into a profit. Others have received investments from high-profile investors and other partnerships that were concluded out of that. And so this is boiling down to the 98% recommendation rating by our alumni, on which we are obviously very proud and keen to keep at that level by making sure that we have the right people on board. But the program doesn't stop there. We have a very active community of change makers. Almost on a daily basis, there are messages going on in our chat groups of people who are comparing notes, who are asking some insights from others who have onto similar jobs or similar projects. Because we realize that in microinsurance, everyone is battling in their own corner in the company. But connecting all of these different people, these different warriors, these different entrepreneurs, you really have a very strong network of change makers from who you can learn and continue to learn. We meet once a month in online meetings, and it's always a joy to see that whenever people travel, that they go and seek their masters, their fellow masters, to connect and to learn from each other. So that's a little bit about the program, how it works. So as I said, the next program is going to start on the 12th of September with a 2-week immersion at Pioneer. If COVID would ruin the party, then we would delay the start to 13th of February next year, because we're going to go out as often as we can. So it doesn't really make sense to sit in the office with masks on if that is only that we can do. We're actively recruiting. We only have a few seats left. So if this sounds like an opportunity you would want to be part of, please do send me a note here now in the chat, or reach out to me or us via email, our website, or on LinkedIn, and then we can follow up individually. So that's in a nutshell a little bit how you really can go about and how the Microinsurance Master program works. Let me quickly see if there's any burning questions that I am missing out here. But it's great to see the interest that you can have. And yeah, one question that I'm seeing here is, what about reinsurance companies? Can they benefit from the program? We do think so. On the program are both established organizations that have already quite some mileage in microinsurance and organizations that are starting out. And really, what you will learn is what others have learned, what others have learned to our scale, but also what others in other geographies are doing. And also for reinsurance companies, gaining a better perspective of the challenges of the insurance company, the partners and the clients is really helpful. The same goes for regulators who have joined us, who have said, well, we as a regulator, we need to set the scene for the boundaries of what insurance companies can do, and helping us to see ahead, helping us to really to think how developed markets like in the Philippines have really worked and have developed that. What are the needs of insurance companies has helped us to anticipate that in our market back home, to really to see how that is working out. So there, so far the promo talk, but great to see the interest that it is generating with you. Please don't hesitate to reach out to me. As I said, and I don't say it to pressure you, but just it would be a pity to miss out on the opportunity you have, as we only have a few seats left available. So do let me know if you want to reserve one of those seats, and then we can take it forward in a one-on-one chat. With that, I would like to conclude our talk, our webinar today. I'm really grateful for the time you spent with us, the interest you've shown in microinsurance and in Microinsurance Master in particular, and in the lessons that we have built so far on how to thrive in microinsurance. Now, I wish you best of luck in taking these at heart, in trying these at your organizations. And if you need any help or any support or any further insights in how to make it work, don't hesitate to reach out to us. That's where we were set up to do. So looking forward to our ongoing conversations and discussions. And once again, thank you for joining us today. Bye-bye.
Bye, birds. Thank you.